Hello and good morning, everybody. It's a nice and bright, sunny morning over here in Bangalore, and I welcome all our viewers to the eighth episode of the GoldenPi Industry Speak series. I'm Abhijit Roy, co-founder and CEO of GoldenPi, the online platform of choice of lakhs of users for your fixed income investments. For the first time viewers today, in this Industry Speak series, we invite the rising stars, the trailblazers, and the behemoths from the financial industry in our country. We engage in a deep discussion with the founders, the CEOs, the leadership team, and understand what is it that they're building, right? What is the business model that they have, the struggles and the success, and in a way, how they're shaping the financial landscape in our country. Today's webinar is a very special one because we are going to discuss on one of the hottest topics in the market, and that is home finance. I'm sure many of us would have been involved in this industry in the form of borrowers for home financing. But today, we have the unique opportunity to observe this industry, know about it from the other side of the table through the lens of a marquee lending institution that specializes in home finance, NIDO Home Finance Limited. Ladies and gentlemen, it's my pleasure to invite to our show Mr. Rajat Avasthi, MD and CEO of NIDO. Rajat brings to the table 20 years of very rich leadership roles across industries such as FMCG and telecom. Prior to this, he has worked in various disciplines across sales, marketing, strategy in Asian Paints, then in Vodafone as a Circle CEO for the northern states in the country. At NIDO, Rajat plays a very pivotal part in setting up the strategy and giving a direction to the company forward. Welcome to the show, Rajat.
Thank you. Thank you.
Along with Rajat, we have Umesh Wadha and Tushar Kutecha from the NIDO team. We also have with us Mr. Pranam Inamdar, who is the director of Trust Capital. Trust is an investment banking firm and is playing the role of a lead manager in raising capital via issuance of debentures where public can participate, retail can participate. Now, I'm sure with that, a lot of you would be very excited to know about it. You have to hold on to your guns towards the end when we discuss all the details about this NCD IPO. So let's get started with our discussion today. So first question to you, Rajat. NIDO Home Finance Limited was earlier known as Edelweiss Housing Finance Limited, and that's a very well-known name. So it would be good for our viewers to know what was the reason to change to the new name. And what is the rebranding that the company is positioning in the market?
Thanks, Abhijit. Thanks so much for your introduction to the entire team from NIDO Home Finance. Very warm welcome to all viewers who have logged in on this Saturday morning. And so interesting question. I mean, if you look at the journey of our organization, it is more than 13 years. I mean, it's almost a decade and a half, this organization that, we work for. And in this journey, just like a child grows, even the organization has grown and evolved. I mean, if you look at our history, we started off as an organization which was centered around, the top metro towns. And a lot of our business was loan against property. But progressively over the years, we started focusing a lot on, number one, on housing, since we are a housing finance company. So today, everything and anything for us is around the housing space. So that was one big shift which happened in our personality. And the second big shift which happened was the kind of markets and geographies that we started playing in. So while we started off with about 7-8 top metro towns, today almost, or rather more than 2/3 of our customers come from non-metro towns. So we are present, we have branches which are in 70 towns across India. And we also have a presence which is much beyond 70 towns, because we also do cover near towns near to the specific locations where we have our branches. Even if you look at the profile of housing we support, so when we were giving loans about 15 years ago, the ticket size or the average amount of the loan that we used to give then was about 75 lakhs. If you index it for inflation, it will be more than a crore now. Whereas actually in today's day and age, what we are doing now is giving loans of between 10 to 20 lakhs on an average. There are some exceptions here and there. So very clearly, we have also now pivoted towards a very different customer profile. Today, the India story, if you look at it, the pride of our economic growth is coming from, how people are laddering up, on the economic scale, how people are becoming more and more prosperous. A lot of people are doing that by going to, towns other than their own villages or, or their own native towns. They're going to other urban centers for, job opportunities. And that is leading to a lot of urban migration and a lot of urban housing demand, which is what we are participating in. So when we saw this entire journey, we also realized that we started off with an identity, and we are very proud of that, Edelweiss Housing Finance Limited. The logo, the symbol, the color, the name, all of us, in fact, on this call, when we joined this company, the company was Edelweiss. So we joined as employees also a company called Edelweiss. But in respect of the changing, customer profile, the changing geographies that we are targeting, we also realize that at the end of the day, we need to build an identity that our specific customers can relate to. Edelweiss is a conglomerate which does many, which participates in many arms of financial services, and housing finance is one of them. So that brand is, in that sense, a brand which covers a width of, customer profiles. To become more specific and narrow for our customer profile, we went through our process, and eventually the process, gave us this name, which is called NIDO Home Finance. NIDO Home Finance is inspired by this word from Sanskrit called need, and need is essentially, literally translates to the word nest. And since we are a housing finance company, we help people in their home ownership journey. Home is about family security, and the emotions are very similar to what are attached with a nest, as a figure of speech. So that's how this name has come to be, and this journey has started recently. We got this name in the month of, we got permission for this name from the Ministry of Corporate Affairs in May 2023, which is this year, and we have only recently come out with a new look and logo, and we are looking forward to a journey ahead, with this identity.
Thanks, Rajat. I think that's basically a great story over there, right? Edelweiss, for our viewers, right, is a very large conglomerate serving across multiple sectors of the industry, right? Now, what this rebranding exercise has been, as I understand from Rajat, as we all understand from Rajat, is basically to create that specific mind share in the mind of the customers that, see, this is a home finance company, right? If you have your needs, this is the brand that you have to come to, right? So there is no confusion over there, right? It's a very clear strategy to position yourself very sharply in the market, and a wonderful name, of course. So, taking a cue from what you mentioned, right? Need, or your nest, right? And stretching it slightly more to, this term, roti kapda makan, right? That makan part, that affordable housing is a key focus area for the government. How are NIDO's goals aligned with that? Or, are you in line with that, that goal?
It's a very, very relevant and very interesting question. So if you see in a country like India, housing, and you put it very, very nicely when you said roti, kapda or makan, housing is an important social need. It is, in fact, for most Indians, the first and last form of social security. Something bad happens, you've had a pandemic, people in some cases have, temporarily lost jobs, unfortunately. And then at least, what a human reaction to that is, sar ke upar chhat to hai. So, right. So in India, housing is that, it's very, very socially relevant. And over the year, governments, in India have, done a lot to support this. I would call it a noble objective. I really would call it a noble objective. Right. And even now, if you look at it, there is a flagship scheme called the Pradhan Mantri Awas Yojana, which is supporting housing ownership in urban and rural parts of India. In fact, this scheme has supported housing ownership of more than 3 crore houses in India, out of which about 1.2, 1.3 crore are from urban India. And that's the area that, we operate in.
Right.
And yes, we have also actively participated in this program. So how it works is that a housing finance company becomes a conduit for the government of India through its agencies to pass, financial benefit or support to people who are building their own homes.
Right.
And we have played that role with, the National Housing Bank, which is, the principal we work with. And very happy, to say that, we have been able to partner this journey for many Indians. And I said a while back that this is a noble objective, and it is humbling. It is humbling when we do our customer visits and actually see what the product that we have enabled means to a customer, and forget about anybody else. All of us in this call stay in a home. Many of us probably own a home. And
Right.
What can be more emotional than that? So yes, that is the role that we have been trying to play and will continue to play. One last point on this is that by specifically playing in the smaller ticket sizes, by default, we are playing or we are participating in customer segments which are economically weak or low income groups,
Right.
or even the lower part of the middle income groups. And in fact, that is where today we participate and, provide home loans, which is in a way the area where also the government of India focuses a lot. And it's a privilege to be a part of that journey.
Fantastic. So I think you mentioned that the average ticket size is in the range of 10 to 20 lakhs, right? And assuming that would be say 80% of the value of a home, it would be the home value probably would be 30, 35, 40 lakhs max to max, right? Which is basically in the middle to the lower strata of the society, giving them that support, right, for a shelter above their head. In relation to this, you mentioned that NIDO is proud to be a conduit between the government's, whole idea about affordable housing and then, moving it forward for the end user, right? So what is your origination module? If you can emphasize and elaborate on that for our viewers today.
And before I go there, if I may just step back. So the average ticket size of the house is also in many cases below 20 lakhs. So it's actually, we're looking at homes which are, costing our customers anything between 10 to 15 lakhs.
Got it.
And maybe one point which I should have also elaborated is that when we talk about supporting, our consumers, and so the affirmative action of the government of India is to support a particular profile of, consumers, which I spoke about.
Right.
They also focus a lot on ownership for women borrowers. They also, there is generally, also expectation that, people who may not even have taken a loan in their life ever, but still would want to buy a home,
right,
can provide support to them. So in fact, a lot of people we give loans to, there is a very high degree of women ownership, which we try to support. That is one point I should have highlighted earlier. And second is that almost 1/3 of our customers are new to credit, which means this is the first credit facility or loan they're taking in their lives. So that is where, really speaking, credit participation in India, that's where we really see the rubber hitting the road and, being part of that. Now, coming back to your question on the business model. So our business model, in a sense, allows us to, participate in the kind of markets I described, and also as much in the metro towns. And we, by count, maybe almost 2/3 or more of our customers come in through what we call as direct sales, where we approach our consumers directly. And then there are certain customers which also we kind of acquire access to through intermediaries, or trade partners, or direct selling agents. So essentially, the idea is we reach a customer in their home journey. So very often we tell ourselves that we work in the housing finance space, but a customer is not looking at housing finance. A customer is looking at home. So in a way, we are actually in the home industry, or the housing industry. We are not in the housing finance industry. So every time, and by the way, we do a review in our office, even with our board, we have one slide on housing and we have one slide on housing finance, because we try to recognize that we are part of the housing industry and not the housing finance industry.
Right.
Yeah. And in terms of so our route to market is largely the way I described it, that almost 70% of our customers we try to approach directly. A lot of it is through word of mouth. In smaller towns, people also come to our branches, and our branches are built in a way where we are able to receive and engage with consumers. Today there was a little bit of a lull in the overall market during the pandemic.
Yeah.
Again, maybe speak about it a little later. It was actually not much of a lull, but it was there. But so we are also now very keen to start looking at digital acquisition. But we have to also appreciate and recognize that we are focusing on affordable housing, where a lot of customers are still comfortable with, like they say, jo dikhta hai wo bikhta hai. So they want to come in and meet you. And while digital mediums can at best give you a telephone number and a name of a potential customer, or vice versa, they can get the telephone number of your branch. But very often customers still feel comfortable that if I'm taking a loan, if I'm giving my personal legal documents to an organization, then it has to be trustworthy, and that's where they would like to meet people. So this is on the consumer facing franchise. But if I look at the underlying business model today as an organization, in fact, the last 2-3 years, when there was a lot of volatility, at large, I mean, and we had the pandemic, which was, worldwide, it was a worldwide phenomena. In India specifically, we also had disruption in the credit market. We used that time to kind of, relook at our underlying business model, and we did a bit of a pivot. Today, we are what we call as an asset-light, business model, where a lot of our, origination that we do, or a lot of support that we provide to customers, is in partnership with, marquee banks in India. So there is an arrangement called as the co-lending tie-up, which was facilitated by the government, by the Reserve Bank of India. And we have partnered that. So in that, we tie up with the banks like State Bank of India, Bank of Baroda, and with these banks, we go to our customers, we give them a loan, and eventually 20% of the capital is ours and 80% is the bank. The bank is able to give loans to customers they will never otherwise be able to reach out to, because their origination model is very different. They are not able to, understand the kind of customer segments we are playing in. For us, we are able to, acquire capital at a lower cost. And both of these things eventually lead to the biggest benefit, which is the benefit to the consumer. So today, our customer base is able to acquire loans at rates of interest which traditionally do not come to that segment, by virtue of us being able to tie up with banks. And in that sense, why we call it asset light is because then 80% of the asset is owned by the banks. So this is a relatively new model which has been introduced in the market by the Reserve Bank of India. We are amongst the pioneers in participating in that. Very proud of that, the engagement and the partnerships we've been able to create. I would also like to bring out a third nuance of our business model, which is recognizing and understanding our customers' needs and then being able to give the right amount of loan, which is, in our parlance, in our industry, it is called underwriting or credit. So there, if you look at it, and we talked about how the government of India, has a very right, correct, and focused, intent to, get to, consumers in a certain profile. But a lot of it, if you look at banks, their underwriting techniques, the manner in which they go and assess the income of a borrower is more traditional. It is based on documented income. It's based on, information which is available very objectively. But today, if you are actually going to go and give loans to first-time borrowers, what I was telling you earlier, or if you're going to go and give loans to people who are buying homes between 10 to 10 lakhs, or sometimes even lower than 10 lakhs in cost, in many cases, you're going to be talking to consumers who may be running MSMEs, they may be running shops, they may be running, they may be on jobs where they are getting salary in the form of cash, they may be doing services. And in many of these cases, the way you are able to understand the customer's income and the predictability of that income and how much is the right amount of loan the customer should, take without getting burdened, because you also don't want our customers to get burdened. They also have a normal life to live. So that is where the underwriting process of an organization comes into play. And that is the third dimension of our business model, which I wanted to highlight. And over the years, we have been able to work a lot on this model. And just to give a illustrative nuance, say, for example, if, our underwriter is visiting a small town, maybe, say Kanchipuram. And he or she is trying to, the underwriter is trying to, assess how much of loan can be given to a small shopkeeper. So that person will typically, stay the whole day with the shopkeeper, make an independent assessment of how many customers are coming, going, will make some assessment of what is the margin the shopkeeper is making on each of, those transactions, come at some assessment of gross revenue per day, per month. Then also try to apply the cost of inventory that the shopkeeper is maintaining, other operating costs they're maintaining, and arrive at some kind of a shadow P&L. And then he will validate the P&L. The P&L will obviously translate into, an expected annual earning in a year, which is your balance sheet. Then that validation will be done with maybe the assets the person is holding, whether it is, a vehicle, whether it is, certain other kind of assets like FDs. And then if they match broadly, you're able to understand that this is what the income of the person is. This is a very consultative, cooperative process where, literally speaking, the underwriter and the borrower are working it out together. So this is a unique process that we do. And all of this is part of our business model, if you may call it that.
Got it. So, Rajat, two questions over here. I'll just take you from a couple of things that you mentioned. Firstly, one data point that you shared is that you've got 70 offices across the towns across the country, right? Which gives you a very good access to this middle and lower middle income street of the society, right? For them to be able to, get this affordable home loans and buy houses, right? And then you also mentioned that digitization around this, right? So my question is rather an observation, right? Through our discussions with a host of NBFCs, each one of them have pointed out that technology plays a very crucial role in their business journey, be it for underwriting, be it for the entire tech stack for disbursement, be it for sourcing, or a combination of every of this thing, right? I'd be very interested to know what is the technology, how are you leveraging technology at NIDO, right, to drive the business forward, and how does that give you that extra edge?
A very good, very relevant question, and I'll tell you why I think it is that. So first of all, there is this urge in managers, starting from me, and I'm guilty of that. I've been guilty of that many times in my life. The attraction of jumping onto the bandwagon.
Right.
And, there was a lot of buzz in the market, and correctly so, about, the fintech story. And I think that has been a great journey for, the Indian economic, resurgence. So there was a lot of buzz around, technology, and every organization, how is it using it? And no doubt there are amazing examples which we see all around us. So we are no different. We have also used technology, but before we jumped onto the bandwagon, we stepped back and said that what is it which is relevant to our customers? Today, if you look at it, I don't think any customer who's buying a home wants a 5-minute sanction, because when buying a home is literally, in some cases, a 6-month exercise, in many cases, maybe even more. And in quite a few cases, even at the best case scenario, maybe at least a month and a half. Nobody will just wake up one day and say, oh, hey, I want to buy a house today afternoon. What's the loan I can get? So the idea or the purpose we felt of technology was not necessarily to, enable something which customers are not even asking for. And we also picked this up when we spoke to our customers, we spoke to our teams. So a lot of our focus instead on the realm in the realm of technology was to use technology for process improvement rather than necessary 5-second, 5-minute turnaround time product. And so we have used technology. We have got so we have a core banking system, which is something we don't touch. And that is, how all banks work. That's in a way, a domain expertise, which has been created by technology as an industry for financial services as an industry. So that's
established. It is pretty much an established stack.
But there is an interface which is used to acquire customers, process their loans, and get their loan disbursed before it enters the core banking system. So that is where we have made a lot of investment in. We've invested in low-code platforms, where low-code platforms allow you to build fast and also to change fast. So the idea is that we feel that, in a process improvement philosophy, it's a journey, it's never a destination. So you will keep on making improvements to your process, and you need to be having the flexibility of changing a platform. We've invested in that. We have something known as a digital lending platform. DLP is something we call it internally, where we log in all our customers, the initial information that we get for our customers, and with the proper control on data security and confidentiality, we are able to pull out a lot of information through API with the customer's consent. So if our customer gives us his name, telephone number, and certain other details with consent, we are able to pull out a lot of information about the customer, so that data entry errors, time to enter, all of those things go away, and the customer also gets a convenience right up in front of the journey. And then there is a whole process of digitization of documents. Eventually we are moving towards a paperless kind of a scenario where everything is digitized. So all of that comes onto the platform, and then thereafter there's a journey through which we go and deploy and disburse the loan. So that is one area we have invested in a lot. Interestingly for us, we now don't use the word tech in isolation. We use in fact, a lot of the internal language we use in our organization is tech and analytics. So for us, technology, analytics, they're two different domains, but they go hand in hand, because technology enables the power of analytics. And maybe I'll expand this particular answer to even cover that point, because that is also something which we have made probably even more investments in, which is the area of data sciences and analytics. So if you look at data sciences, again, a big buzzword, and probably a bigger buzzword than technology, and a far newer buzzword. All of us hear about AI, about ChatGPT, about certain other nuances of how data sciences are used to do everything in lives, including surgery and including so much else. So what we saw in our industry, and we also were a part of, was that the most obvious and traditional portfolio management. So you use analytics and algorithms and models and data sciences to assess geographies or portfolios or specific fully some problem might be there, some be able to, as a result of which, reach out to the customers in advance and find alternate solutions. So collections, portfolio management, early warnings, these are the kind of things traditionally that data algorithms have been used in our industry. We also did a lot of that. What we have also done is we have taken analytics a step further. We are now using it for multiple use cases. So today, for example, we use our algorithms created through data sciences for our cash flow planning. We do a lot of it for our financial planning. We are using data sciences today, also to create use cases for cross-sell or upsell. I mean, which of our customers would want to have, maybe a top-up loan. All of that. And I anecdotally give examples to some, stakeholders who speak to us, even in our renaming journey. And this is something which is a very dramatic example, which is why I give it. It's not a traditional example at all. So even our renaming journey, when we process of shortlisting and finalizing a name for our organization, which is NIDO Home Finance, the new name. At a point in time, like any other situation, we would have had a lot of names to choose from. So we use sciences to kind of profile those names into emotions, into associated attributes and many other things, which allowed eventually the process to select what is the kind of home we want, which will relate best to a housing finance customer. So it's a very unique use case where we use data sciences. So the point is, something like data sciences has infinite applications. When used with good amount of data for which you need technology, and which is why I say tech and analytics, I think it's an area which it's a capability which we will continue to use for the rest of our housing finance company's journey. So this is how our experience has been in technology in specific, and related to that even in the area of data sciences and analytics.
Thanks, Rajat. I think two key takeaways for all of us over here. One is, technology and data science being used heavily across the value chain, right from sourcing the customer to improving the processes, doing the cash flow management, to even doing certain forecasting around the models of the customers, profiling them, and what would be suitable for them for upselling and cross-selling. Couple of questions there. Quick questions. First is for the upselling and cross-selling. What are the other products that Nido has, for our viewers today that, that you offer to, your audience, that you offer to your customers?
Umesh, would you like to share your thoughts on that? So Umesh is a chief business officer. He coincidentally is also the first employee of Edelweiss Housing Finance 13 years ago. He has seen the journey like none of us have seen. So, Umesh, your thoughts?
Thanks. Thank you so much. Thank you so much, Rajat. Well, we're talking about the products of Nido Home Finance. Obviously, we are a housing finance institution, but let me just try and give you a little bit of a texture of the kind of business we do and the kind of products that we offer. Basically, we are a housing finance company. So, needless to say that our main product and the main flagship is home loan products. So obviously, NHB, which is our regulator, they require us to maintain a certain level of home loans in our portfolio, and therefore we have to maintain about 55 to 60% of our balance sheet as home loan portfolio. Obviously, within this home loans portfolio, there are multiple variations because we go after several segments of customers, and therefore we have multiple types of home loans which suit the need of every different customer in the market. You see, for example, we give loans to people who are salaried. We give loans to people who are self-employed professionals like, chartered accountants, lawyers, etc. We also give loans to self-employed non-professionals. Like Rajat was alluding earlier in the conversation about small-time borrowers who are in tier 2, tier 3 towns of India. These are people who have kirana shops or a idli dough maker, those kind of people. So we have variations in the home loan products and to match the needs of every such customer in the market. But in addition to home loans, we also have a little bit of a loan against property, which is called home equity, and which is a very, very important and a very interesting product these days, because this product helps those customers to cash out their equity from an unencumbered property which they might have. So this is a great product because sometimes people have needs for taking personal loans, people have needs for taking a car loan, and self-employed people take a overdraft facility from a bank. And you know what? Interestingly, all these loans, whether it is personal loan, car loan, overdraft loan, business installment loan, all these loans are much more expensive than a loan against property. So if you are a person who has a unencumbered property on which you have not taken a loan, you can actually take a loan against it and consolidate all these loans together. And so the advantage is you'll have one loan instead of 3-4 loans put together, and it will be much cheaper than all of those loans. And it will be for a much longer tenure, which means your installment will be much smaller. So we have both the categories. We have home loans, we have loan against property. We also have a little bit of very small book of construction finance book where we give small loans to some of the builders. We help them construct affordable housing, and we also in turn, as a part of our assembly line product, give loans to people who buy units in those projects that we fund. So the idea is that to be in all the segments of the market, and we cater to customers along the entire assembly line. This is our product suite. We have now married it to the asset light CLM model, which we have embarked upon. And therefore, it's a very unique and a very robust combination of a CLM, which we run in the market, and a strong product suite that we have to offer to our customers. When they get married together, the ultimate product which the customer gets is not only a superb diversification and a range of product suite, but also at an amazing cost, because we have married it to the CLM and we are giving it jointly along with a big bank or a PSU like a State Bank of India. So that is broadly the long and short of our product.
Thanks, Umesh. For our viewers today, right, a fantastic suite of products. If I put in all that, the things that I have been able to put in together from you, right? One, Nido Home Finance uses technology, and data science heavily, right? Number one. Number two, a basket of loan products. One, home loan. Second one is a very, very important insight free of cost that Umesh actually gave right to all of us, is if you have got various kinds of loans and you have got a property, a home that is unencumbered, which means it is not I mean, you haven't collateralized it against anything, right? Then you can combine all those loans into one against this home, right? And your rates would be much lower, right? Way more efficient way to manage your cash, right? Great insight, Umesh. Thanks for that. And apart from this, Nido also has a small amount of exposure into construction finance, right? So, extending on that particular format itself, one of the key challenges or the tricky areas for any NBFC is collections, right? And what I clearly understand is you have got a very robust technology engine which assesses the customer. You also do in-premise assessment of the customer, of the borrower by wherein the underwriter is sitting with the borrower, understanding his whole profile, and then actually seeing whether he is eligible for the loan or not, and the exact rate, amount, all that is determined, right? On the other part, right, the collections, how are you using technology over here, right? So that, you are being able to run it efficiently and, maybe you can share your NPA levels also, how it, this whole collection engine of yours helps keeping that at very low levels.
Yeah, so interesting question. I mean, the complete cycle finishes the complete cycle of a loan, while it starts from giving the loan, eventually, is closed when you get the money back. And in that sense, most of our, focus on collections is to kind of make it proactive. If you look at our, general, approach towards collection. So we have 70 branches that we spoke about. Very often when people take loans, the trust that they have with the sales team is the highest, because that's the person they have interacted with a lot. So quite often if, some query or some questioning is required from the customer's end regarding the process, or any other, small challenges that they may be facing, very often they anyway reach out to our branches and to our salespeople. Aside of that, we any which ways have a team which is dedicated towards collections. In our industry, I had shared a statistic that a third of our customers are new to credit. So they've taken a loan for the first time in their lives. So one of the things that, can help, for such customers is that initial understanding of credit discipline. And that is where we try to play a role. I mean, even when I would have taken a credit facility for the first time in my life, may not even have appreciated that, I am repaying my EMI, but if I, delay the EMI by even 1 day, my own credit profile, my own, credit rating can get impacted. And so I'm paying my EMIs every month, but if I'm paying it with a little lack of discipline by, a day late or 2 days late, at the end of the day, it's my credit imprint which is getting impacted. So educating that to a lot of the first-time borrowers is part of our process where our teams do it. Typically we see it takes maybe a cycle of a year when, first-time borrowers broadly understand and become comfortable with the process of, monthly EMI and all that. So I think that in itself is a form of credit education that we don't realize we are giving, but we end up giving. In many cases, we also have, so we use technology and analytics to identify, cohorts where we are feeling that customers might be struggling with this discipline. And then those are the specific cohorts that our people can go and educate, and then they can go and proactively tell them that your EMI is due on such and such date. It'll be good if you can, keep that in mind, so that then accordingly the customers can make the, relevant finances available so that the EMI gets paid. In addition to that, there are times when, if a consumer has not paid on time and needs to pay, before, a particular date, we also enable that through, payment links. So that the person can pay conveniently without having to, bother about going to a bank and depositing money and so on and so forth. They can even do it remotely. So we also enable digital collections to make the process convenient for our customers. And so these are the various nuances of how collections, so collections in itself becomes a very, complex activity when you're going to 70, 80, 100, 200, 300 towns, to think, because there are a lot of your But we have realized that early education,
We lost you
one-time
in
borrower.
between, actually. We just lost you in between for a couple of seconds. You mentioned
Am I audible now? Am I
Yes, yes,
audible?
true. You're
Sorry.
audible now. Yeah.
So what I'm saying is our general experience has been that we use early education for first-time borrowers as one important area under our collections agenda. We try to enable digital collections wherever people are defaulting and making it a little late. It's for the convenience for the
Right.
customers themselves. And of course, our salespeople, our branches are equally there to assist and help people, because we have realized consumer behavior in India is such that if I have taken a loan from somebody, uh, even 3 years later, if I have a question, I will typically like to speak to that same individual. That person may be a collections person, salesperson, and I may have a question on maybe a prepayment, but I will still like to go back to that one individual whom I trusted at the time of taking the loan from.
Right.
So we enable that by having our branch presence. Our branches are built in a manner where any customers can walk in if they have anything regarding collections, even if they have anything regarding other areas besides collections, and they can come and meet our teams.
Perfect. As a stretch of this, can you share some details about the portfolio performance, the overall portfolio that NIDO manages, and how has it been performing for our viewers?
So in fact, today we see volatility phase. I mean, give or take. And what was the volatility phase? There was this entire period when we had the pandemic and the impact of the pandemic. We also had this period preceding that, which in the Indian context, the credit markets had seen a liquidity squeeze. I think both of these are now behind us, and there was obviously a period where a lot of people had their businesses had slowed down, and again the Reserve Bank of India had given support by providing moratorium to retail borrowers as well as to MSME borrowers, and there was even a facility given under COVID where by the Reserve Bank of India, where certain customers could take a restructuring a solution also. So all of that happened, and it played out, and all of that is now behind the industry. It's over. People who had moratorium are now back to paying their EMIs. People who had restructured their loans are back to paying their EMIs, and their businesses are back on track. So in that sense, today I think the credit performance, what we are seeing today is stable. It will only improve. We are working with a net NPA of less than 1.5%. For our affordable housing oriented business. Our GNPA is around 1.9, and these numbers have been stable for a few quarters and will only improve as our balance sheets keep on increasing. So I think from a credit performance point of view, the industry is back to normal, if I may call it that.
Perfect. So I think now the topic to discuss would be, the much awaited section for this discussion, and that is NCD IPO, launch from NIDO Home Finance. So for our viewers today, NIDO Home Finance is raising capital, right? As an NBFC, retail has an opportunity to participate over here with a ticket size of as low as 10,000, right? And completely through a digital journey or through a people-based journey, right? Whatever you prefer. Now, on this, if you can share the details of this, round of fund that is being raised, and some details around what is the interest rate, what are the tenures, what is the credit rating for our viewers.
So you want us to share the issue structure, right?
Yes, yes.
Okay. Pranav, will you be doing that?
Pranav, would you be?
Yeah, definitely.
Yeah, Abhijit, if you can just project that. Yeah.
So just to share with our viewers and people who are logged in, that NIDO Home Finance has already opened up for public issue of secured redeemable non-convertible debentures. They have been open from 30th August 2023. The issue is likely to close by 12th of September 2023. And the lead managers are Trust Investment Advisors, Nuvama Wealth, and Tipsons. The base issue is of 75 crores with an option to retain an oversubscription of 75 crores, which will aggregate to 150 crores. The NCDs have been rated as AA minus by CRISIL and A plus by CARE. And there are 10 series actually of secured NCDs. This is with a tenure of 24 months, 36 months, 60 months, and 120 months with annual as well as monthly payment option. So this is very convenient for especially the retail people who are looking at monthly options also, because this is giving us a monthly option. And with different tenures, right from 24 months to 120 years, people can decide what kind of lock-in they want in terms of the yield. Because if you see the yield on the longest one goes right from 24 months, it goes from 895 to 120 months will go up to 1045, which is an excellent coupon, which a retail investor can easily, make a cash flow planning for over the next 10 years. Okay, and the best part is, the issue, once the issue is closed, the NCDs will be listed on BSE, and the allotment will be on first come, first serve basis. Since keeping in mind this is a IPO, investor can start with a minimum application of 10,000 rupees, and then subsequently add 1,000 rupees each. So the investment is minimal, right from 10,000 to 10 lakhs. A retail investor can invest with excellent and very flexible, very convenient maturity profiles as well as the coupon profiles. So all in all, I think it's a very, very good issue, and people should look at the issue to subscribe.
Thanks, Pranav, for sharing that. Yeah. So as you can see, it has already got started on 30th of August. We are already 2 days into the whole issuance cycle, right? Like Pranav mentioned, the highest coupon that you get, the highest yield that you get is 10.46%, right? And you have multiple, investment flexibility around whether you want a monthly payment, whether you want an annual or a cumulative payment, right? And accordingly, you get the returns on your investment as well. And as retail, one can participate with as low as 10,000 completely through a digital journey via UPI, which has been now provided as an infrastructure by the government for retail to participate, right? You can visit GoldenPi. The issue is already live, right? And you have got multiple options to invest into. All right, so that is for the information of our viewers. Now let's move on to the last question to you, Rajat. After that, we'll take up the Q&A from our audience. So, question to you is: so, what is the vision for NIDO going ahead? Right? How do you foresee the housing finance industry, home finance industry? Let me correct it. You clearly mentioned home finance industry, right? And that's a very sweet term. It connects with the heart of people because everybody wants a home for their own selves, right? So how are you looking at this home finance industry growing, going ahead? And what is NIDO's vision of, going ahead and becoming a larger and larger entity in this market segment?
So thanks, Abhijit. Say if you look at the home finance industry, in fact, I'll take a step back and I'll go to the home housing, kind of industry. So in around the time when the 2011 census had been done, at that time, the housing shortage in urban India was around 18 to 20 million homes. And that would have now gone up last decade to maybe 2 or 3x of that, as, the number of people, migrating to urban India has increased. So a lot of the reason for housing shortages and this housing shortage was urban India. So a lot of it comes when people migrate from rural India to urban India in search of job opportunities. So having seen much more urbanization, which is happening, a lot more people have come to the urban centers. And as a result of which the housing shortage in India would have expanded even further. And if you look at it from that point of view, today, the housing finance industry, which supports home ownership, the size of the home loan book in India is roughly around 29 lakh crores. 29 lakh crores. And various estimates across the industry, we are that indicate, give or take, those will become maybe 55 to 60 lakh crores. And so if you look at it from that point of view, the growth of the housing finance industry is going to be immense. Today, if you look at this 29 lakh crore, the affordable housing segment, a lot of what we spoke about, is maybe 30 to 40% of that. So a lot of the future growth is going to happen from this segment. So in that sense, the opportunity for being part of the home ownership journey in India is wide. It's huge, and as lenders, it will be important for all of us, to be able to build up our systems, our processes, our branch structures, our presence in the markets, to be able to participate in this growth journey that I spoke about. Specifically about our outlook for the next 10 years. So we will probably continue focusing a lot more towards the 40% that I spoke about, which is the affordable housing journey. We feel that is where we can add value, to and complement the effort of other banks and larger institutions who do a different kind of underwriting and the customer profile where the income is completely documented versus, and I spoke about that a while back. We will focus a lot on that in the coming years, continue to focus a lot in that in coming years. It will be reflected in the manner in which we open our branches. They will be in branches will be in tier 2, tier 3 towns where the urban migration is happening. We will use additional capabilities to make our underwriting strong so that we are able to give the right amount of credit to the right kind of borrowers. For that, we will use a lot of underwriting scorecards, and we will keep on sharpening our underwriting scorecards by the use of data sciences, and as a result of which, be able to go down and participate in the true growth journey of India. So I think if I was to summarize in one line our approach, it is to essentially continue focusing on granular retail business of smaller ticket sizes with a large focus on home loans. Umesh mentioned that we also give loans against property, and in a particular to a particular extent, we will also do that, and construction loan as by the regulator, and that is something that we will focus on on the side. But our primary focus is going to be affordable housing, and we will continue being part of that journey, and that is where I explain the market opportunities also.
Thanks, Rajat. Thanks for sharing that view. I think one measure. I think not one, a couple of measures for a nation to be called as a developed nation. The criteria that is there is how much quantity of cement they manufacture, how much quantity of steel they manufacture, and how many people own homes eventually, right? So when we look at those developed nations, right, literally everybody owns a home, right? Huge volume of cement gets manufactured, steel gets manufactured, that gets consumed in this home construction industry, right? And that's one of the measures. So I think NIDO is playing, for our viewers today, NIDO is playing a critical role in pushing ahead the nation along this trajectory of from being our nation as a developing towards a developed nation, because that is one of the key matrices on which a nation gets measured, right? Let's move on to the Q&A section now. We have got a few questions already. The first one is, I think you have hinted in bits and pieces over here, but still for our viewers, the question is, what are NIDO's growth strategies for the next year, considering AUM and geographical expansion?
So our growth strategy very simply is where the affordable housing opportunity in India is. That is where we to participate, which is what I just explained. I mean, it is going to be in some measure in the metro towns, but in a much larger measure in non-metro towns, and we are present there. We are present in those geographies already. We will continue our focus there. We don't want to defocus by trying to do 20 things at the same time. AUM growth is an outcome, 10%, 20%, 25%, any of these numbers, depending on how the market, shapes up. We are geared to handle that. In fact, the reason why we are here today is to raise capital for growth. And that's an interesting dimension I haven't spoken about up till now, actually. So if you look at our line of business, We have spoken a lot about the asset side where we go and, become part of a housing journey of our consumers.
I think we lost Rajat's connectivity. So maybe Umesh or Tushar, if you would want to. Rajat, we lost you in between, actually.
Oh, sorry. Am I back now or?
Yeah, you're audible now.
I'm so
You're
sorry.
audible.
I had this problem because my internet. Okay. If I'm audible right now, anytime you feel I'm not audible, let me know because I seem to be hearing you all. Yeah.
Sure, sure. You're loud and clear now.
Right. Sorry. So yeah. So like I was saying was that we will continue to play in the affordable housing, market, and one part of the of our strategic story, which I talked about, we talked a lot about the customer part of the franchise. There is also our raw material that we create, which we have to give to our customers. We raise money and give money then thereafter. So
Right.
if you look at the liability strategy, it is also something we have worked to diversify a lot. So today, if you look at our liabilities mix, around 1/3 of that is from bank lines. 1/3 of that is through markets like NCD market, the mortgage-backed in India, where we do PTC transactions, where we leverage our portfolio to get investors to come and invest in the portfolio, and as a result of which we get liquidity which we can deploy. So these are the three ways we have been able to diversify.
You could kindly repeat, Rajat. We lost you in between. Your sentences got broken.
Okay, at what stage did you lose me?
I mean, if you can mention, the three strategies through which you raise the raw material, which is the funding, right? That you're mentioning, if you can repeat that.
Sorry. Yeah, so the three ways that we raise is 1/3 is through bank lines, which is the very traditional way of doing it, and we'll continue doing it. 1/3 is through markets, which is what we are here for on this call, which is through bond issues, NCDs, and all of that. And around 1/3 of it is through securitization, which is basically the MBS market, the mortgage-backed securities market, where through PTC transactions, we are able to leverage our portfolio and get investors to give us invest in that. This is the way we have been able to diversify our liabilities mix. Specifically, today we are here with this bond issue. We were in the market last year also, and we had a very successful issue then, and we are looking forward to a very successful issue this year also. So I'm sure for our investors, investing in an organization which works in something like the housing finance space, which is, I just gave you the numbers, right. The opportunities infinite, the intent is noble, it has got a lot of government focus and support. It's a great area to invest in.
Right.
In general, I'm not only specifically speaking about NIDO. And NIDO we've spoken about. I'm sure our investors will their best judgment. They're equally experienced.
Understood. Though we lost a few words here and there, but I think we understood the answer that you shared with us. Moving on to the next question. This is from Satish, and he asks, can you share the borrower's profile that you serve, and what is the typical yield on a loan?
Umesh, would you like to take that?
Sure enough, Rajat. So, like I was, mentioning some of it in the earlier part of the discussion, that we serve, our main focus is the affordable home loan customers. And in the affordable customer home loans, our average ticket size is in the neighborhood of about, 18, 19, 20 lakhs or thereabouts. So these are the people we go after. Almost 65-70% of our customers come from the informal segment, which means that, either they are they are self-employed. I mean, they may not be filing income tax returns for adequate amounts, or these are people who are salaried people, but these are people who work in a partnership concern or a small private limited companies or small shops. So that is largely the informal segment that we go after. In the self-employed category, these might be people who are running small kirana shops in small towns. They may be running a small manufacturing setup, they may be running some small trading setup or a service provider. But essentially, these are all people who are in the neighborhood who borrow about 18, 19, 20 lakhs, which means they are able to serve an EMI of approximately 1% of that. So let's say about 18, 19,000 per month. And effectively, these are people who have a monthly income of approximately, therefore, about 35, 40,000 rupees or thereabouts. So we go after all kind of segments, but 65, 70% of our people are informal. 35% of our customers are new to credit, which means this is the first time they are borrowing something from the market. Also, 35% of our customers are women borrowers. These are people who are not only borrowing, but they are also borrowing to own a property in that sense. So that is broadly, the customer profile we go after.
Got it. Thanks. Thanks so much for sharing that. The next question is from.
And also, I'm sorry, you mentioned that what is the yield? I forgot.
Yeah, the yield part. Yeah.
Affordable housing. So we would go out and lend in the market in the neighborhood of about 12.5% or there.
Got it. Next question is from Soumya Gupta, and the question is, what will be the target market for NIDO? How will NIDO differentiate from other housing finance companies? I think it has been well answered. What is the target market for NIDO? Affordable housing, right? Home loan section, right? Which is like 30 to 40% of the 29 lakh crore home finance industry that Rajat mentioned, right? Let's let's get the answer for the other part, which is how NIDO will differentiate from other housing finance companies.
So, Abhijit, if you look at it, in our industry, I very often say this to stakeholders and investors, we are not in the business of creating demand, we are in the business of servicing demand. So there is a lot of people who want a housing loan. And for us, I think of any lender, the objective is to be able to get the right match. I mean, the customer will have certain needs that I want a certain amount of loan at a certain rate. For some people, the amount is more important. For some people, the rate is more important.
Right.
There'll be certain amount of lenders who can give one, some who can give the other benefit, some can give both, some can give none. So eventually, it's I think the ability of an organization to be able to find the right set of customers, and the demand is there. Go and find the right set of customers and be able to give it, which is where scorecards, data sciences, all of these things will play a role. I believe our differentiation will be in our capability to be at the right place and being able to target and reach out to the right set of customers. Of course, backed by process efficiency, because a lot of people would want, once they are in the journey, the process to be efficient and comfortable. And lastly, give them trust. Very often, and coincidentally, we are in this forum also with an agent. Our partner is also called Trust in this. So I will give you some anecdotal example. I mean, once I was in a market visit in Delhi, and I was, visiting a very big trade partner, and that gentleman was. So I was asking that person that, how do you get your customers? So he said that 40% of our customers are word of mouth references. So I said, okay, what is it that people generally, seek? So he was joking that, in typical trade parlance, he said that
Rajat, we lost his connectivity.
This is confidential stuff. Maybe I may not even be sharing it with my own family. And if I'm going to share it with somebody, I need to trust that person.
Rajat, I would request you to, reshare your answer, because we just lost you in between. Sorry about that. But I think we heard that you were discussing with a person in Delhi, and he said it's mainly word of mouth that, the sources come in. And then you asked that, you were delving deeper into that. So if you could repeat from there.
So the point I was making was about trust, because people, when they take a loan, they have to give their financial documents and property documents. For them, who they're giving it to becomes very important, and they need to trust that person.
Correct.
So this is where trust becomes another differentiator in the manner, the kind of people we recruit. Because today our recruitment strategy is to largely take people from the geography. So if you are in Kanchipuram, if you are in Elluru, if you are in Tiruvallur, wherever we are, we need people from that market, because that's the community connect, the build that trust. So that's, I think, the other thing that we make an effort to
Got it.
build.
Got it. Well explained. I think we have run out of time, way beyond 12 o'clock. It's already 5 minutes past 12. Maybe just one more question. Last question from Abhinav Shukla. And the question is there any additional coupon incentive for existing NCD holders of ECL? Please clarify.
Tushar, Pranav, anyone?
Yeah, hi. Good afternoon, everyone. Tushar here. So yes, Abhijit, there is an additional incentive of 0.2% across the coupon rate in all the series for existing debenture holder of all Edelweiss Group company and equity shareholder of Edelweiss Financial Services Limited.
That's a very critical piece of information, which I am sure a lot of our investors would not be aware of. That yes, there is an additional incentive if you're an equity investor or an existing NCD investor into any of the Edelweiss group of companies.
Yeah.
Wonderful. Wonderful. Cool. I think with that, we come to an end of this wonderful discussion that we have had with Mr. Rajat and the team at NIDO and Pranav from Trust. NIDO, a marquee NBFC company, very strong legacy of serving the market, a part of the Edelweiss Group, rebranded into NIDO to create that market share, right? Serving the home finance needs of the country, pushing the nation forward in their own capacity from being a developing to a developed nation for us. NCD IPO is open, right? Understandably, a marquee company like that, issue size of 150 crores, right? Already opened 2 days back, right? So I think for investors who are looking for investment opportunity in NCDs, right? This is the opportunity. Please go ahead, examine and take your call, right? So with that, thank you, Rajat, for your time. Thanks, Umesh. Thanks, Tushar. And thanks, Pranav. And a big thank you to our audience. We shared the information about this very insightful, interesting webinar that we had today, just half a day back, right? Yesterday. And yet we have seen a very good turnout from our viewers, from our users. So a big round of applause for, to you as well for your time. Thank you, everybody.
Thank you.
Thanks. Thank you, everybody. Thank you, everybody.
Thanks, Pranav.